Hi, welcome to the Crypto Republic. If you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video and subscribe. Hello, XRP Army, and welcome back. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Look, I'm going to be straight with you. What I'm about to walk you through is going to change how you think about XRP. Not because of hype, not because of speculation, but because the entire global financial system is breaking in real time. And XRP is sitting right at the center of the solution. I've spent weeks pulling together macro data, central bank reports, cross-border payment volumes, settlement statistics, liquidity figures. And what I found is genuinely staggering. Every single major problem facing the global economy right now, from trapped liquidity in correspondent banking to the de-dollarization movement to the trillions sitting idle in nostro accounts. Every single one of these problems has a technological solution, and that solution runs on XRP. Now, before you think this is just another crypto video, let me be clear. I'm not here to shrill. I'm here to connect all the dots that nobody in this space is connecting. I'm going to show you how the macro environment is creating the exact conditions that made XRP not just relevant, but essential. And by the end of this, you're going to understand why the smartest institutional minds in the world are paying very close attention to what's happening with XRP right now. Let's dissect this. So let's start with the biggest problem nobody's talking about. The global cross-border payment system is fundamentally broken. And I don't mean broken like it's a little slow. I mean broken like it's costing the global economy hundreds of billions of dollars every single year in trapped capital, failed transactions, and unnecessary friction. Let that sink in for a second. Here's the data. The Bank of International Settlements, the BIS, they published their latest figures showing that cross-border payment flows exceeded $150 trillion annually. 50 trillion. And the average cost of sending a cross-border payment? Still hovering around 6% for retail transfers. Write that down and let that sink in. For correspondent banking, the settlement times are 3 to 5 business days. 3 to 5 days to move money from one country to another in 2024. Now, here's where XRP comes in. And this is where it gets interesting. XRP settles transactions in 3 to 5 seconds. 3 to 5 seconds versus 3 to 5 days. The cost per transaction is a fraction of a cent. We're talking about a technology that can do what the existing system does, but 1,000 times faster and 1,000 times cheaper. Let this sink in. But it's not just about speed and cost, ladies and gentlemen. It's about the trapped liquidity. Right now, banks around the world hold an estimated $5 to $7 trillion in pre-funded nostro accounts. That's money sitting in foreign bank accounts just to facilitate cross-border payments. It's dead capital. It's not earning returns. It's not being deployed productively. It's just sitting there because the current system requires it. XRP eliminates the need for these pre-funded accounts entirely. When you use XRP as a bridge currency, you don't need to hold foreign currency in advance. You convert to XRP, send it across the ledger in seconds, and then convert to destination currency on the other side. That $5 to $7 trillion in trapped liquidity gets freed up. Think about what that means for global economic efficiency. Think about what that means for banks, for businesses, for entire economies. And this isn't theoretical. Ripple, the company most associated with XRP, has been working with over 300 financial institutions across more than 40 countries. They've been processing real-time transactions, moving real money, saving real costs. The on-demand liquidity product, which uses XRP as the bridge asset, has processed over $30 billion in transaction volume. That's not a white paper promise, ladies and gentlemen. That's real-world adoption happening right now. Now let's talk about something that's reshaping the entire geopolitical landscape. De-dollarization. This is where XRP's role becomes not just important, but potentially historic. The BRICS nations, Brazil, Russia, India, China, South Africa, and now with new members, including Saudi Arabia, the UAE, Egypt, Ethiopia, and Iran, they represent over 40% of the global population. and roughly 30% of global GDP. And they are actively working to reduce their dependence on the US dollar for international trade and settlement. China has been pushing the yuan in bilateral trade settlements. Russia has been forced to develop alternative payment systems due to sanctions. Saudi Arabia, for the first time in decades, has signaled willingness to price oil in currencies other than the dollar. The UAE and India have signed agreements to settle trade in local currencies. But here's the problem. When you move away from the dollar as the universal settlement currency, you create a massive liquidity fragmentation problem. If India wants to pay Saudi Arabia in rupees, but Saudi Arabia doesn't want to hold rupees, and Saudi Arabia wants to pay China in reals, but China doesn't want reals, you see the problem. You need a neutral bridge asset, something that no single country controls, something that can move value between any two currencies instantly. That's exactly what XRP is designed to do. XRP is not tied to any single government. It is not controlled by any central bank. It's a neutral digital bridge asset that can facilitate the exchange of value between any two currencies on the planet. In a world that's moving away from dollar hegemon, the need for a neutral settlement layer doesn't decrease. It increases dramatically. Let this sink in, ladies and gentlemen. This is massive. And the data supports this. The BIS has been actively exploring multi-central bank digital currency platforms. They call them M-Bridge projects, specifically to address this fragmentation problem. The technology they're exploring is conceptually identical to what XRP does, a shared ledger that allows instant settlement between different currencies without requiring a dominant reserve currency. XRP has been doing that since 2012. The infrastructure is alive. The network's proven. The regulatory clarity that XRP received through its partial court victory in the United States, where a federal judge ruled that XRP itself is not inherently a security, gives it a regulatory standing that no other digital asset at scale can claim. In a world where institutions need regulatory certainty to adopt new technology, that ruling is a massive competitive advantage. Let's go deeper, because what's happening with central bank digital currencies right now is directly relevant to XRP's future. Over 130 countries, representing 98% of global GDP, are now exploring or developing central bank digital currencies. China's digital yuan is already in advanced pilot stages with over 260 million wallets created. The European Central Bank is moving forward with the digital euro. The Bank of England is consulting on a digital pound. The Federal Reserve is researching a digital dollar more cautiously. Now, here's what most people miss. CBDCs are not going to talk to each other natively. You're going to have a digital dollar system, a digital euro system, a digital yuan system, a digital rupee system. And they're all going to be built on different technological stacks with different protocols. The interoperability protocol and problem is enormous. The BIS Innovation Hub has been running Project M-Bridge, which involves the central banks of China, Thailand, the UAE, and Hong Kong. The goal? To create a shared platform for cross-border CBDC settlement. The results have been promising, but the project is still in pilot phase and faces enormous political and technical hurdles. XRP and the XRP Ledger offer a ready-made solution. The XRP Ledger was built from the ground up to handle cross-currency transactions. It has built-in decentralized exchange functionality. It can settle any asset against any other asset in seconds. And it's been operating continuously since 2012 with zero downtime. Think about what that means. When central banks eventually deploy CBDCs and realize they need a bridge between them, they have two choices. They can spend years and billions of dollars building their own interoperability infrastructure, which is what M-Bridge is attempting, or they can leverage an existing proven regulatory cleared network that already does exactly what they need. The institutional logic is overwhelming. And this is why I believe XRP, the anointed one, is positioned to become critical infrastructure in the emerging CBDC ecosystem, not because of speculation, but because the technological solves a problem that every central bank in the world is going to face. Let's shift gears and talk about something deeply personal for hundreds of millions of people around the world: remittance. The World Bank estimates that global remittance flows will reach between $879 to $930 billion this year in 2026. For many developing countries, remittance represent the single largest source of foreign income, exceeding foreign direct investment, official development assistance, and portfolio investment combined. In countries like Nepal, remittance account for over 25% of GDP. In Honduras, El Salvador, and Guatemala, it's over 20%. The cost of sending these remittances is obscene. The global average cost of sending $200 in remittance is still over 6%. That's insane. In some corridors, particularly in sub-Saharan Africa, it can exceed 10%. That's even more insane. That means when a worker in the United States sends $200 home to a family in Nigeria, up to $20 is eaten up by fees and foreign exchange margins. Multiply that by hundreds of billions flowing through these corridors annually, and you're looking at tens of billions of dollars being extracted from the world's poorest families by intermediaries. This is where XRP's utility is most intermediary transformative. Ripple's on-demand liquidity product is already being used in remittance corridors. In the Philippines, one of the world's largest remittance markets, Ripple has partnered with local payment providers to enable near-instant low-cost transfers using XRP as the bridge currency in Mexico, the second largest remittance market in the world. Similar to partnerships are operational. The impact is measurable. Transaction costs drop from 6% to less than 1%. Settlement times drop from 10 days to seconds. And the recipient gets more money. Not more money in some abstract theoretical sense, more actual purchasing power in the hands of people who need it the most. Now scale this up. If XRP-based solutions capture even 10% of the global remittance market, that's over $87 billion in annual transaction volume flowing through the XRP ledger. The network effects would be enormous, massive, ladies and gentlemen. This is so big, you should be writing all this down. More liquidity begets more users, which begets more liquidity. This is the flywheel that drives adoption, and it's already spinning. Ladies and gentlemen, this is exactly why we built the Crypto Republic Desk monthly Patreon. If you want to go deeper into the macro research, real-time breakdowns, and the ongoing data behind these shifts, that's where we continue the analysis. Over 535 active traders and investors are already in there tracking these same flows with us. One good tip in the pits can easily pay for your entire year subscription. You want the deeper macro research and learn how to take advantage of all this? Come and join the Patreon community, the Crypto Republic Desk Monthly, and welcome all the new members. The link's in the description. Okay, so let's talk about what's happening on the institutional side, because this is where the story gets really compelling. The global payment industry is worth over $2.2 trillion annually. Cross-border payments alone account for $150 billion in revenue for banks and payment providers. And the incumbent, SWIFT, the correspondent banking network, they know their technology is outdated. SWIFT's own data shows that 94% of their messages still rely on legacy formats. The average cross-border payment still touches 3 to 5 intermediaries before reaching its destination. SWIFT has been trying to modernize. They've introduced SWIFT GPI, which improves tracking and speed for some transactions. But GPI is essentially a band-aid on a broken system. It doesn't address the fundamental problem, which is the underlying settlement infrastructure. Hasn't changed in decades. XRP addresses the fundamental problem. It replaces the entire correspondent banking chain with a single atomic settlement. No intermediaries, no nostro-vostro accounts, no multi-day settlement cycles, just instant, final, irrevocable settlement on a decentralized ledger. And institutions are noticing. Standard Chartered has publicly discussed using Ripple's technology for cross-border payments. SBI Holdings, one of Japan's largest financial institutions, has been one of the most vocal institutional supporters of XRP and has integrated Ripple's technology into its remittance corridors. Bank of America has filed over 50 patents related to blockchain-based cross-border settlement, the same problem that XRP solves. The regulatory landscape is also shifting in XRP's favor. The court ruling in the United States provided a degree of regulatory clarity that is unprecedented in the digital asset space. While the tokens are still fighting to determine whether they're securities, XRP has a federal court ruling stating that the token itself is not inherently a security. For institutional investors and financial institutions, that clarity is everything. It means they can engage with XRP without existential regulatory risk that hangs over other digital assets. The European Union's Markets in Crypto Asset Regulation, MiCA, is creating a comprehensive regulatory framework for digital assets. XRP, with its established track record, clear utility, and existing regulatory clarity in the U.S., is well positioned to be one of the first digital assets to achieve full compliance under MiCA. This opens the doors to institutional adoption across the entire European market. Now let's talk about something that's going to be the biggest financial story of the next decade: tokenization. Boston Consulting Group estimates that the tokenized asset market could reach $16 trillion by 2030. $16 trillion. That's not crypto speculation. That's the tokenization of real-world assets, bonds, equities, real estate, commodities, private credit, onto blockchain networks. BlackRock, the world's largest asset manager with over $10 trillion in assets under management, has launched its own tokenized money market fund on the Ethereum blockchain. Larry Fink, BlackRock's CEO, has publicly stated that the next generation for markets is the tokenization of securities. JP Morgan has been running its Onyx platform for tokenized collateral movements. Goldman Sachs has launched its own tokenization platform. But here's the critical question. When you have tokenized assets on multiple blockchains in multiple jurisdictions, denominated in multiple currencies, how do they interact? How do you settle tokenized U.S. Treasury bond against a tokenized Japanese corporate bond? How do you move tokenized real estate collateral across borders? You need a settlement layer. You need a bridge. You need something that can move value between different tokenized assets, ecosystem instantly and cheaply. The XRP ledger is uniquely positioned for this role. It was designed from inception to handle multi-currency transactions. It has a built-in decentralized exchange. It supports the issuance and transfers of any asset type. And it does all of these with settlement finality in 3 to 5 seconds at a cost of fractions of a cent. Ladies and gentlemen, I'm trying to take the PhD out of PhD for this. And this is what I convey to everyone that retains any capacity. Ripple has been actively building in this space. They've launched a sidechain specifically designed for smart contracts and tokenizations. They've partnered with institutions, exploring tokenized asset insurance. And the XRP ledger's native support for issuized currencies means that any asset, a tokenized bond, a tokenized commodity, stablecoin, can be traded and settled on the ledger natively. Tokenization revolution is coming. The question is not whether trillions of dollars in real-world assets will be tokenized. The question is which infrastructure will power the settlement interoperability layer for this new financial system. I believe XRP, the anointed one, is the strongest candidate, and the data supports the thesis. Let me put all of this together, ladies and gentlemen, and show you why the macro environment is creating a perfect storm for XRP adoption. Catalyst 1, the Federal Reserve is expected to begin cutting interest rates. When rates come down, risk assets tend to perform well. But more importantly, lower rates reduce the opportunity cost of holding non-yielding assets and increase the attractiveness of technologies that improve capital efficiency. XRP's entire value proposition is about capital efficiency, freeing trapped liquidity, reducing a settlement cost, eliminating unnecessary intermediaries. In a lower rate environment, the ROI on adopting XRP-based solutions becomes even more compelling. Catalyst number 2, the geopolitical fragmentation I discussed earlier is accelerating. Every new trade agreement settled in local currencies, every new BRICS expansion, every new sanctions regime creates more demand for neutral settlement infrastructure. XRP is the most battle-tested, regulatory-cleared neutral settlement asset in existence. Catalyst number 3, the CBDC rollout is approaching critical mass. As more central banks deploy digital currencies, the interoperability problem becomes more urgent. The institutions building CBDC infrastructure are going to need a bridge, and XRP is the most logical candidate. Catalyst number 4, the tokenization of real-world assets moving from pilot to production. BlackRock, JP Morgan, Goldman Sachs. These are not crypto companies. These are the most conservative, most regulated, most systematically important financial institutions in the world. And they're all moving towards tokenization. And when they need a settlement layer, they're going to choose the most reliable, most proven, most regulatory compliant option. Catalyst number 5, the regulatory environment is clarifying global MiCA in Europe, the court ruling in the U.S., the progressive frameworks in Japan, Singapore, and the UAE. The regulatory fog is lifting, and XRP is emerging as one of the cleanest, clearest winners. Now, I know what some of you are thinking. What about the competition? What about SWIFT? Blah, 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 blah. What about stablecoins? What about other blockchains? Let me address each of these. SWIFT is not going anywhere overnight, but SWIFT is a messaging system, not a settlement layer. It tells banks to move money. It doesn't actually move money. XRP actually moves value, and the industry shifts from messaging to settlement, and is shifting. SWIFT's relevance diminishes. SWIFT itself knows this, which is why they're exploring blockchain integration. But they're trying to retrofit a 1970s system for a 2020s world. XRP was built for the 2020s world from day one. Stablecoins are interesting, but they have a fundamental problem. They're pegged to fiat currencies. USDC is pegged to the dollar. EURC is pegged to the euro. In a de-dollarizing world, stablecoins dominating any single currency face the same political and counterparty risks as the currencies they're pegged to. XRP is neutral, and it's not pegged to anything. It's not controlled by any single entity. That neutrality is a superpower. Other blockchains, Ethereum is a general-purpose smart contract platform. It is not optimized for payments or settlements. Its transaction costs can be high, and its settlement times are longer. Stellar is the closest competition and competitor to the XRP in terms of design, philosophy, but it lacks the institutional partnerships, the regulatory clarity, and the track record of real-world transaction volume that XRP has established. XRP occupies a unique position. That is why it is the anointed one. It is not trying to be everything to everyone. It's optimized for one thing, moving value across borders instantly and cheaply. And it does that one thing better than anyone else in existence. Let me hit you with some numbers that I think are generally important. The XRP ledger processes 1,500 transactions per second. It can scale to handle the throughput of Visa. The average transaction cost is $0.0002. The average settlement time is 3 to 5 seconds. The ledger has been operating continuously since January 2012. Over 80 million ledgers have been closed. Zero downtime. Ripple's on-demand liquidity has processed over $30 billion in transaction volume. Let that sink in, ladies and gentlemen. It's live in over 40 countries. It's being used by some of the largest financial institutions in the world. The XRP ledger's decentralized exchange has over 800 trading pairs. It supports the issuance of any asset type. It has built-in compliance features, including authorized trust lines and freeze functionality, features that institutions actually need. The market capitalization of XRP, even at its current levels, places it among the top digital assets in the world. But here's what's remarkable. Cross-border payment markets alone is worth over $150 billion in annual revenue. If XRP captured even a fraction of that market, the implications for adoption and utility would be transformative. And the developer activity on the XRP ledger is accelerating. The introduction of sidechains, the expansion of smart contract capabilities, the growth of decentralized exchange, the ecosystem is maturing rapidly. This is not a stagnant project. This is a technological platform that's evolving and expanding its capabilities in real time. So here's where I land on all of this, ladies and gentlemen. The global financial system is at an inflection point. The old infrastructure correspondent banking system, SWIFT messaging, pre-funded Nostro accounts, multi-day settlement cycles. It's breaking under the weight of a global economy that demands instant, cheap, borderless value transfer. The geopolitical landscape's fragmenting. De-dollarization's real. CBDCs are coming. Organizations accelerate. Every single one of these macro trends creates demand for exactly what XRP provides, a neutral, fast, cheap, regulatory clear bridge between any two currencies or assets on the planet. This is not speculation. This is not hype. This is a technological solving real problems for real institutions, processing real money. $30 billion in transaction volume over 300 financial institutions partnerships. Regulatory clarity that can no other asset at this scale can match. Question is not whether the world needs what XRP does. The world desperately needs what XRP does. The question is how quickly adoption accelerates and how much of this massive addressable market XRP captures. I believe we're at the very beginning of the adoption curve. The macro tailwinds are strengthening. The regulatory environment is clarifying. The institutional interest is growing. And the technology is proven, live, processing billions of dollars of real transactions. If you've been watching XRP from the sidelines, I'd encourage you to look at it through this macro lens, because when you connect the dots, the liquidity crisis, the de-dollarization wave, the CBDC rollout, and tokenization revolution, the regulatory shift, what you see is a convergence of forces that makes XRP's value proposition more compelling today than at any point in history. This is not financial advice. Do your own research, but understand the macro picture, understand the utility, understand the opportunity, because the world is changing, and XRP is built for the world that's coming. This analysis was valuable to you. Smash that like button, subscribe, so you continue with the Wolfpack with all of these continuing development updates. Drop your thoughts in the comments. I read every single one of them. And if you want more deeper macro research like this, let me know what topics you want me to cover next. Till next time, stay Gucci. Do not get cut up like sushi. Well, ladies and gentlemen, a lot of things to talk about, but I'm going to be very, very quick because never enough time. I want to welcome all the new members of our Patreon, all the new members of the membership channel. Here's my daily financial combat update for everybody right now. What we're really paying attention to is we're paying attention to the relationship between gold and oil. It's inverse. That's dictating the entire markets. We're going to get ready to close out some of our Bitcoin longs that we had told you about a while back when we first mentioned in one of the videos that we said that banks were advertising to their clientele when gold was down to pick up some Bitcoin. Trade probably has a lot more to go. This is not financial advice, just my own opinion. But pigs get slaughtered and hogs get fatter. So always know to take something off the table. But as we're watching this, and this is the what if forest, ladies and gentlemen, the what if forest, how it was taught to me on the floor of the New York Mercantile Exchange is the areas where you can make the most money, but also get cut up like sushi. Being battle tested as a financial mercenary and why with the Remora, you learn to wait for the appropriate levels. There's a lot of good levels right here, none of them that any retail person should be trading. But then again, most people that retain this any capacity are not retail people by any means. And I'm not used to talking to retail people whatsoever because the things I explain, what I just went through this entire video, this is what we explain to family offices, the families that the family offices work for, sovereigns, hedge funds, anyone that retains any capacity, to see something that most people are not paying attention to. We don't believe that there's going to be any form of lasting peace in the ME. That's just my professional opinion. But the markets now are keying off of the least avenue of risk again. So you have a bunch of things that can happen here, right? First, with gold, you got to see 4,500's got to hold. If the 4,500 level hold, it's going to go higher. You could see like 46.76, 46.80, maybe even 47. I don't know. But again, we're in the true what if forest. We're in a range. It's being dictated by oil. Oil is being dictated by tweets. It's being dictated by chaos. Again, I don't see anybody, crying uncle in this game with chicken. But as this relationship continues, what it will do, it will give us levels to trade off of tactically. These are trading levels. These are not position accumulation. Again, so look at oil. If oil holds here, it could try to take out 110, 112. It could try to move higher right now. But as you can see, as oil moves lower, gold goes higher. Oil moves higher, gold moves lower. Why Bitcoin has basically broken off from that? You have people who are taking their profits, working with banks, like we had said, going into Bitcoin. That is an avenue of least resistance. So you got to look like this. One or two things are going to happen here. Either shakes gold out of this, either there's an escalation of war, and that ends the relationship of inverted as far as we're concerned between gold and oil, or it makes the market trying to free float, which stocks will go higher if there's a resolution to the war, that there's some kind of agreement that everyone that can agree on, some face saving, right? That will allow the Fed to be able to cut interest rates. These are the only ways that we can see, and a lot of people on the street agree with as well, that sees gold rally again right now. We're bearish, medium and short term, but over the next 24 months, the metals are going to outperform because Operation Protect Your Win, it's going to begin, and rip your face off rallies are going to happen. And we're going to look back at these times and people are going to say, wow, I wish I would have taken more. That's always, I wish I would have done more. No, this is financial advice, just my own opinion, in anyone that retains any capacity. Silver's doing the same thing. They're all keying off of oil. So you got to look at the levels to hold. What we're paying attention to, the 72.90, 72.85, 72.93, these levels have to really hold. They'll push higher to 74, potentially 75 again. But you got people playing the ranges. You got people selling into this. I wouldn't sell the metals here, even though we're short-term and medium-term bearish, only because we believe a lot of these moves are not structural. These moves are being driven by moving averages, and these moves are being driven by geopolitical tweets. That's what we feel at the end of the day. So I don't like to, it's been my experience, what was taught to me, I don't like to go against my overall themes on a longer term scale moving out. Again, I'm not used to talking to retail people. I'm used to talking to a different type of audience. That's why we try to take the PhD and our PhD for this. But ladies and gentlemen, if you want to take advantage of what I'm talking about, come and join us in the Crypto Republic Desk Monthly. One good tip from the pitch can easily pay for your entire year, and you can see the tactical plays that we're doing and learn. And come and join over 535 active traders and investors. But that's what the story is right here. So you pay attention to DXY. You're paying attention to oil. You're paying attention to silver. You're paying attention to gold. You're paying attention to all of this. Again, money follows the path of least resistance. That's where this is going to go. All of the fantastic things that we just said to you in this video is what I harp on about XRP. What we talk about the bricks and the unit and the west side of the tranche. Again, the world is going to change very soon in an explosive way financially. We're waiting for this. Operation Protect Your Win, it's going to come. Understand right now, wait for appropriate levels so you do not get caught up like sushi. If you FOMO, if you FUD, if you just whatever you do, FUD, whatever you do, if you lose your Gucci conviction, your Gucci clarity, you're going to get caught up like sushi. A financial mercenary is forged in discipline. Our discipline comes from the losses. I will always remember my first margin call on the floor of the New York Mercantile Exchange. I will never forget it. I learned such a lesson from that. Ladies and gentlemen, remember, people work very hard for a better tomorrow. That's why you're working extra jobs to collect. Again, I openly say that I disliked Bitcoin when it first came out for many reasons. The market proved me wrong. But when the market gives you another opportunity and a potential setup that, in our opinion, where this is going, I'm not going to be late to this party. I'm not going to miss this. And if you want to learn how to take advantage of all this, come and join us in the Crypto Public Desk Monthly. I love you all. I'm going to see you on the front lines, ladies and gentlemen. This content's for informational entertainment purposes only. Should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be like the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Some moments in history are loud, but the ones that change everything are quiet, right up to the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the public. I love you all. Stay Gucci, stay frosty.